Hey everybody, welcome back to the channel. I'm so pumped that you're here with me today because we're diving into a massive story that could shake up the global economy. And picture this, the US dollar, the king of global finance for decades, might be on the edge of a seismic shift. Economist Stephen Jin is sounding the alarm, saying Asia could be about to unleash a jaw-dropping $2.5 trillion sell-off. Yeah, trillions with a T. And that's not pocket change, folks. And so, really, what's going on and why now? And what does this mean for all of us? You. Well, stick with me here, folks, because we're going places. Grab yourself a cup of coffee, take a seat, settle in, and let's break it down like we're just chatting over the kitchen table. For years, countries across Asia, think China, Taiwan, Malaysia, have been racking up huge trade surpluses with the US. They're exporting way more to us than they're buying, which means they've been piling up stacks of US dollars. We're talking billions upon billions. But these dollars aren't just chilling in a vault somewhere. No. Oh no. Money's got to work, right? Warren Buffett said, if you don't figure out a way to make money while you sleep, you'll work until you die. So, Asian governments and companies have been pouring these dollars into American assets, treasury bonds, real estate, stocks, you name it. Stephen Jin and economist Joanna Ferrari estimate this dollar stash has ballooned past $2.5 trillion, mostly held by Asian exporters and big institutional investors. And here's where it gets dicey. A lot of these dollar bets are what's called naked longs. Fancy term, right? But it just means that they're banking on the dollar staying strong. But there's no safety net if it starts to wobble, if it starts to fall, crumble. If the dollar takes a hit, those bets could go south fast, and nobody wants to be left holding a losing hand. That risk is starting to make Asian investors nervous, and it's sparking a big rethink about how they play the global finance game. And so, really and truly, the question here, maybe the elephant in the room, why the sudden panic? Well, let's talk politics. With President Trump back in the driver's seat, he's doubling down on shaking up global trade. He's pushing hard to challenge trade norms and put economic pressure on China, trying to box them out. But here's the thing. China and other Asian nations aren't just sitting there. They're looking at their massive dollar piles and thinking, if the US is playing hardball and the dollar's dominance is looking shaky, why are we holding all the risk? It's like realizing you've got too much money tied up in a stock that's starting to tank, and you start looking for the exit. And we're already seeing the signs. Bloomberg's dollar index has dropped 9% since January of this year, and meanwhile, Asian currencies like the Chinese yuan, Taiwanese dollar, and Malaysian ringgit are flexing, gaining strength against the dollar in just the last month. Coincidence? Probably not. Some experts think Asian policymakers are letting their currencies rise as a strategic move in trade talks with the US. It's like they're playing chess while we're still figuring out the board. And now here's the huge piece of the puzzle: repatriation. Stephen Jin says about $1 trillion could flow back to China alone as companies pull their dollar investments home. And why? Well, if the Federal Reserve keeps cutting interest rates, and they've been hinting at it so far, U.S. bonds and other dollar assets start looking less juicy. Lower returns mean less reason to keep all that cash parked in the U.S. And when investors start selling those dollar assets to bring money home, it's not just a ripple, it's a frickin' tidal wave. If other Asian countries follow China's lead, the wave could turn into a full-on hurricane, putting serious downward pressure on the dollar. So, what happens if this $2.5 trillion avalanche starts sliding? Buckle up, folks, because the fallout could be wild. A weaker dollar means imports get pricier for everybody, for everyday goods, and Americans will feel the pain. Think higher costs for everything from electronics to groceries, which could stoke inflation at a time when prices are already a headache. How many of you guys think prices are too high as it is? U.S. bonds could take a hit too, forcing U.S. banks to jump in to steady the ship. And globally, investors might start ditching dollars for other options, emerging market currencies, maybe even Bitcoin or other digital assets. The dollar's been coasting on its exorbitant privilege as the world's reserve currency, but that crown isn't glued on. It can fall off. History shows reserve currencies can lose their shine, just as the British pound did. But it's not just about Asia unloading dollars. There's a bigger shift happening. Countries like China and Russia are already moving away from the dollar in their trade deals. Vladimir Putin recently bragged about how most of Russia and China's trade is now in yuan and rubles, building a system that's protected from other countries, third countries, and global market swings.
The timely and coordinated steps made by Russia and China to switch to national currencies in trade settlements is also a useful step. As a result, the bulk of our operations is done in yuan and rubles. This means we have a sustainable system of mutual trade that is reliably protected against any attacks by third countries and negative trends in the global market.
And that's not just talk, it's a signal. The BRICS nations and others are investing in financial systems to trade in their own currencies, diversifying away from the dollar. It's like they're building new highways for global trade, and the dollar's not the only toll booth anymore. And now, folks, don't get me wrong, the dollar's not going to collapse tomorrow. This isn't going to happen overnight. Let's keep it real. But the forces at play here are huge, massive, like tectonic plates shifting under the global economy. If Asia starts moving even a chunk of that $2.5 trillion back home, it could change how money flows around the world. And when our investors see that happening, they might follow suit, amplifying the effect. So now you're probably thinking, well, Kevin, what should we keep an eye on? Well, first, watch U.S.-Asia trade policies. Any new tariffs or tensions could push Asian investors to hit the sell button faster. Second, stay glued to the Federal Reserve. Their decisions on interest rates are huge. Rate cuts could speed up the dollar exodus. And finally, track those Asian currencies. If the yuan or Taiwanese dollar keeps climbing, it could be a flashing neon sign that the dollar unwind is picking up steam. All right, folks, that's the story for today. A potential $2.5 trillion shakeup that could rewrite the rules of global finance. But what do you think? Are we on the brink of a dollar downfall, or is this just a bump in the road? Drop your thoughts in the comment section, and let's keep this conversation going. If you enjoyed this deep dive, smash that like button, hit subscribe, and ring the bell for notifications so you don't miss a thing. Oh, and make sure you give the good folks over at Chapter a call. They are our partner offering free Medicare help. Their number's on the screen, 270-467-2426. There's more information in the description down below and pinned comment. You can visit them at www.askchapter.org/Kevin for more information. Thanks for hanging out with me. Enjoy your day. And I look forward to seeing you guys in the next video. Take care.